everyone. I'm Denise Garth, Chief Strategy Officer at Majesco, and you're listening to the Future of Insurance Industry Leaders podcast series. Follow along as I interview the best and brightest leaders in the insurance industry and insurtech landscape to bring you the latest in digital transformation, innovation, industry trends, challenges, and opportunities, as well as next-gen technologies. We use our experience to
Welcome
anticipate
everybody
what's
to today's
next
Future of
without
Insurance
losing sight of what's
podcast.
now.
And I got to tell
Stay
you,
tuned to find
I
out your
am
next
so
now.
excited to have Lisa Wardlaw on my podcast today. She's the president and founder of Digital 360 Immersion, and she and I have gotten to know each other in the last probably couple of years. We have so many perspectives on things, and we get so excited to start talking and going wild, and it's going to be a fun one. So don't want to miss this one. So welcome, Lisa.
Thank you so much, Denise. I'm beaming. I'm literally beaming hearing you say that because, it's funny. Our industry seems so like everybody knows each other. But then when you really get to know somebody, right? When you really get to know somebody and you're like not just resonating with who they are and yes, they've been around or they've had this, that, or the other role, but you and I just like connected at this really deep level. And I thoroughly enjoy not only like our conversations on podcasts or on stage or on webinars, but usually it's those behind the scenes moments where you and I are breaking down the industry that leave me going, yes, there's still people that are going to like take this and create the momentum we need. And you are one of my favorite people to speak with.
Well, the same here, Lisa. It's a small industry and everybody really does kind of know everybody, but there are a lot of new people coming into the industry. So I always like to start off with having you give a little bit of background on yourself, where you've been and what you're focused in on now from an industry perspective, Lisa.
And I'll keep it brief. I'll keep it really, really, really brief. So let's just suffice it to say that I've been in and around the industry for 30 years, Denise. And I know I don't look a day old enough to have had that many decades of experience. No, I joke. So I started my career here in the industry in public accounting. I spent a decade at PwC, audit, systems, advisory, and global capital markets group, which for those people who wouldn't know, that's like M&A, financial services, transaction services. So valuations, which is really important now with all the startup world, but I used to do it before we even had insurtech, right? So I did valuations prior to insurtech. And then Denise, I ended up working at a lot of large carriers, a lot of very large reinsurer, Munich Re, Farmers, ING, Voya, to just name a few. And that other little thing in Atlanta called the Home Depot, I created their global supply chain. Yeah. In all those roles, it was really finance focused. So finance, and then I became a CFO. And then Denise, I pivoted because of my background in systems and process. I pivoted over to becoming the chief operating officer. And then I held roles of chief strategy officer, chief digital, then went into insurtech. I would say for those people who would maybe hear me or think of me and like, what is she doing with her life? Okay, yes. But really I'm always trying to find a place like from where to capture the flag. How do we make the impact that we want to make on the industry to drive the necessary change that you and I talk about a lot, Denise? So the common thread of consistency and what I focus on now is I help enterprises, companies, startups, industry leaders break the status quo. How do we think differently about solving the problems that we need to solve at scale?
I think that is actually a reason why you and I relate so much on a different level is because both you and I have had a lot of different roles in a lot of different types of organizations across the industry for a long period of time. And it gives a different perspective about what we need to do as an industry that I think is pretty unique.
You're right. And I wish that it had been as accepted back in the days when I was doing this as it seems to be now, because people used to definitely also challenge me when I would interview for a job based on my resume. But to your point, Denise, I think that, and you and I share this, right? There's a natural curiosity that comes with the people who are nomadic in their roles and they're jumping from kind of vertical to vertical, that if we recognize that, and we can talk about talent in the industry and what it's going to take, but if we recognize that agility in you and me in people coming up, it really helps us connect dots and patterns, which is why you and I both ended up in strategy, right? That maybe if you go too deep and too vertical, you may miss that. I call it longitude and latitude. Brian Falchuk and I talk about that too.
So, one of the things that you and I love to have a conversation around, and we talk a lot about in the various different forums that you and I get participate in, is technology being a foundational issue for insurance. especially for LNA and H insurers who are at least a decade behind P&C in transformation, at least a decade. What do you think the tech issue is for the life and annuity and health segment? And why is there so much legacy? And how is this now kind of come home to roost for all insurers, but particularly for LNA and H? And how can it really challenges the launching of new products, this whole customer digital experience, and more importantly, this operating cost for both P&C and LNH?
Well, first of all, let's just start by the fact that I love, love, love the fact that we get to talk about LNA and H. And I even love the fact that you and I know what that means. Most people I talk to, I'm like, life and health and annuity, and they're like, huh? So we used to bundle at a segment level in our SEC reporting, life and health. So I always say life and health, but annuity is always included in there. And to your point, Denise, I worked at ING, which was back in the 2000s, they had bought all the large annuity companies and put them together. And then, of course, they spun that off and it's Voya now. But back in the day, I worked at an annuity carrier. So I have a big background on that too. But let's step back, Denise. I think one thing that so you're right, we're at least a decade behind. I see that as an opportunity, though. And the reason why, I just want to start by saying it, pay attention, LNH and A. Don't do what the P&C people did. Please don't copycat that journey. So it's like watching, a football game. You've seen the pass, you've seen the playbook, you've seen the defense and the offense, you've seen what works and what doesn't work. We have to take advantage of that. And we have to leapfrog and actually, to your point about come to roost, we have to harness the fact that we don't have to spend all that tech debt doing some things that work, but a lot of things that didn't. And so we can use that, I call it like the leapfrog approach or the quantum leap approach. And I used to talk about that a lot with my team. A couple of the carriers are joined, Denise. Like, how do we learn from that and jump forward? But let's step back for just a moment before you and I can go into all this about product innovation, what consumers want versus what they need. How do we change all this? But let's just start with the very fact that life, health, and annuity is long duration. So for people who are listening to your amazing podcast and don't know what that means, on average, we have policies that sit on the books, meaning in force, for at least 20 years. So the average duration that I held, like in my books and records, Denise, when I was managing insurance companies, was, I think my average was like 33.6 years. Okay. So the one thing that I think let me say one other thing. It is very complex to administer the types of financial and insurance things that we have together. So like an annuity where you have like I used to have to file mine on the SEC, right? So you have these guaranteed income earnings. You've got these other parts that are life insurance earnings. And I won't bore anybody by going into the components and pieces and parts of all the different life products out there, but they're very complicated. So we've got this really long duration and we have a very financially complex product, right? And so serving that over a long duration meant a lot of times we custom coded all these systems, right?
Oh, yeah.
My favorite thing was pushing the old grind it down on a Cobalt mainframe, Denise. And I swear when I did it, I had the visual of the Chevy Chase Christmas movie where he can't get the lights to come on and then he plugs them in, or I think his wife finally plugs them in. And the whole town, the lights go out. Okay, that's what it's like to literally feel like you're retiring a legacy mainframe. So we had to custom code all these systems. In that, and I say this politely, do not underestimate the complexity of a life, health, and annuity policy administration system. So part of the problem, Denise, has been that newcomers or outsiders have always, you're overcomplicating things. We're going to make your tech modern. We would say, well, show me how, but it never met. And I call it like the processing foundation that would be necessary. And we can't, and again, remember I mentioned we're talking long duration. So if we go through a policy conversion or an in-force conversion, you're talking about infinite amounts of data and processing that has to not skip a beat. These are people retirements and investments and when they look at their life portfolio earnings or cash surrender value and all these things we look at, Denise, right, we cannot miss a beat with that. So I think that the juxtaposition has come in where two things. One is that's not going to be predominantly a 3 million invested insurtech that's going to take that on.
Nope, not at all.
I'm sorry, Denise, I did say that on your podcast. The reason I'm laughing, the absurdity of the data migration alone that somebody thinks, and you know, Denise, right? They come up to you at conferences and they're like, hey, I can do this. And you're like, yeah, you can. Now, the other side of the corner is you and I really want to do this.
Yep, exactly.
But it really requires an engine, a foundation and engine that's built for purpose. So I'll pause there, Denise, because then I think we can go into the products and all the things going on with the wealth transfer and the retirement gap and all that. But I just want to start by saying you cannot approach this cavalierly, but we need new modern tech. And I think because of that failed promise, duration, how long it is, how difficult it is, and just the fact that there's no mainstream, like really big tech that's been around for a long time. Now, clearly, I know there are solutions, wink, wink. I think that people have just said, well, we'll just keep on keeping. It's like the car that drives to the corner store. You're like, well, all I need to do is drive to the corner store today, so I don't need a new car.
Exactly. I think to kind of weave into that, what you and I have talked about is really that there's so much changing in the market, and there's a different generation of buyers now coming to look at insurance, particularly for life, annuity, and health. And I think that we can talk about life, annuity, and health in a kind of general basis, but you can even break that down even further because some employees now and some individuals that are coming in to need insurance, they're going to want it from a group insurance perspective. Others may want a voluntary benefit piece of insurance. Another one might be through a work site. And the other is what I call retail individual. And so you've got those kind of four segments, and those processes around those are different for those four segments and how you're engaging with the customer. And I think that when your leapfrog idea here is that we've got a changing marketplace, we got a changing set of risks, we got a changing set of buyers, a younger generation, and we got different kinds of workers. A lot of people are part-time workers or gig workers. Yeah. And they're going to want maybe a benefit on and off, or they're going to want to have a work site level of product. And we've got to be able to kind of address that from a much broader product portfolio perspective, but also then look at personalized data and underwriting. So talk about what you're seeing around some of these opportunities.
Let's talk about that together, because I think totally agree with you, Denise. If I were to wave my strategic, visionary crystal ball and look into the future together with you, I think you and I share this lens that this segmentation that we have today was created based on the linearity of the world that we lived in. But humans, you and I, Denise, are not P&C, life, annuity, health. You and I are Lisa and Denise. Mm-hmm. And we live our life. We go get in our car and we drive to the store, and we may be on our way, I'll use my example, to a Pilates class, or we may be on our way to the grocery store, or we may be going to meet somebody, do a fitness session, or we may be going to watch our kids do X, or whatever we're doing, right? Insurance was segmented and bifurcated by line of business. In today's world, by the way, there are lots of reasons for that, and I'm not saying the regulatory reasons don't still apply. But in today's world, I think the problem with product, with distribution, with segmentation, even with the way people have failed at attempted, air quote, hyper-personalization, is they've approached applying these things to the linear segments that pre-existed. And so, Denise, what we haven't thought about is how do we break that down and coalesce that around a 360 lens, which coincidentally is the reason why I named my company 360. But anyway, very few people ask me that, so I thought I'd shout it out on your show, Denise. What is interesting is we read all these reports about aging and about Gen Zs and millennials, and you and I have some great friends that produce those reports. You produce amazing reports. The problem that I see is that we think of it again in these linear segments of age. And what we're not thinking about is there's a transcendation on top of that. So let's take as an example, Denise, I'll break it down. Let's talk about something like everyone thinks about the younger generation and changing jobs a lot and not having one role, having multiple roles, the gig economy, et cetera. Well, I read a statistic, Denise, that actually applies to our age.
It does.
What? And I mean, I'm a living proof of that. But, and you and I were just talking about how many roles we've had. One thing that I think we're not doing in product innovation and product design is we're not thinking about L, A, and H products that support someone becoming a solopreneur, someone taking a sabbatical, someone deciding that they want to pivot and totally do this, that, and the other. And the statistic I read, Denise, is that I think by 2025, over 55% of the workforce will not be corporate employed. And by the way, I'm using workforce. I'm not saying Gen Z, Denise.
Workforce total.
And by 2030, so 5 years later, that number goes to 72%. Maybe I'm off a few points here or there. Denise, and this is actually part of the project I was working on 5 years ago in one of my roles where I was working on Black Ops or whatever. Just think about the simple world today is we have mostly built our products for corporate employees and people that go through this is the game of life, roll the wheel, you go to school, you get married, you get a job, you retire, you get it, right, Denise? How do we have products that serve people that are working for roles? How do we have products that support people that's income is now dependent on something like an algorithm? We have disability for physical disability. We have cyber, which is like if you get hacked, but we don't have something that says, well, what about when the algorithm, and these are things like there's a interruption, workers' comp, almost a disability. Think of like photographers and things like that. So Denise, I guess my point is we can't apply the data at the pace we need to design new products if we don't have the technical foundation in place. And you know that I like to use the word dynamic. The problem with most admin platforms, which need to be, we started this by saying, raise your right hand, they need to be robust. They are static in nature. They were designed for Lisa 30 years ago that's never changed or changes maybe once in a blue moon. You've got to design a coalesce, much more dynamic, long duration engine. I don't think that comes easily, but I'm so excited to see people usher that in.
Well, and I think the silos thing, I remember back when I was working for an insurance company, one of the things that it was pretty radical at the time, and there was not a single system that could support this, let alone the regulatory environment. But it really gets back to the essence about the person. If you think about it, somebody who's coming out of college, it's the first thing they do. They probably rent someplace and they buy a car. Maybe they don't. But you've got people who are going to go in and out of different jobs, are going to go in and out of different parts of their lives. And how can you keep them as a customer? And how can you transition the products that they have bought from you and transition them into something else? So what if they bought a variable universal life? What could they use the cash value for? Maybe the homeowner's insurance, or pay for their auto insurance. I mean, it's about a holistic kind of view of the financial well-being and managing the risk in a more holistic way. And that sets up a whole different set of potential partnerships, different distribution channels, a whole different kind of environment. But it's really getting to the essence of what people are looking for. Help me ease my life. Help me manage my life and manage my financial aspects of my life and the risk in my life.
So the word that I use for that, Denise, when I left my role leading reinsurance at a life and annuity and health, I left there and I was a little bit for a brief moment disenchanted with insurance because I was like, okay, I'm trying to solve this problem, etc. And what the word I kept using when I was talking to people, Denise, was lifestyle assurance. Because you just articulated what was frustrating me, which is everyone I would, and again, these were boardrooms. It was always upsell, cross-sell, how do we do this? How do we do that? And I was like, but you're missing the focus on the person in the center. And a lot of people, and there are some good examples out there, by the way, Denise. A lot of people focus on customer centricity and, human in the center. But we'll talk about this where systems don't support this in just a minute. What we're forgetting is that you have to, and I'll quote Marie Kondo, you have to spark joy in interacting with me in my life in a way that's not duty, duress, or I need this. And this gets to, I used to call it the new 4-letter word of insurance needs to be want. How do we create environment that is almost self-directed products? And I used to call it consumer consensus created products that people want, because we're not going to be able to create all the elements, Denise, to those examples we were just giving. It's too dynamic now. It's too evolving. I think our role should be taking what consumers want and identify, and then we should be framing it into the regulatory frameworks, going and getting the addendums and all the rates, filings, and all those things, right? Like that should be like what we do. But I think allowing this hyper-personalized, like, how do I want to live my life? And you
Yep.
use some great examples. How do I create a value that I can live today on? And there are some movers and shakers, I think, doing this, but even then, Denise, they're having to do it in these silos. And our intake, it takes scale, right? That's why it hasn't really been done today. So I want to come back because the fundamental problem that I see, Denise, is why this hasn't taken root. Because I think we all aspire, by the way. Maybe not at the level you and I are talking about, but most people aspire, even if it's just for customer acquisition cost is high and we want to retain our customers. So intrinsically, the numbers should be in our favor. But
Yeah.
the data models themselves and the systems that use those data models were never designed for this.
Not only the data models and the systems, but even the business models, which are really what those
Right.
are built on. So I want to come back to something that you said about this, kind of like it's an opportunity for the LNA&H to kind of leap forward. But I think first is your background, having been on both segments, the LNA&H and the P&C sectors. Talk about where you see the major differences between those two sectors, particularly something that you and I have talked about is this economic model focused on mortality and morbidity versus optimization and automation. How that contrast of the two can help the LNA&H insurers leap forward, and why an inverted value with that as compared to P&C. I know that's a lot of stuff. So I know you'll break it down, but I think you've got a unique background from a CFO and a strategy perspective and technology perspective that you can kind of talk this through.
Okay, so first of all, let's just put on our CFO cap, right? Insurers at the end of the day, regardless of how they're structured as a mutual, as a reciprocal, as a publicly traded company, et cetera. I mean, it's simple, right, Denise? They take premium, they invest. Everyone forgets about the asset side, which is where this conversation is going to be very important. They
Exactly.
invest that premium to earn interest and gains and losses to support paying out claims and having capital sufficiency for them to be capital efficient, to run and optimize their business on behalf of their shareholders or policyholders, just depending on how they're. In a P&C company, that is very year over year, and it's very, very, very much loss ratio focused. And so insurtechs and everyone entering predominantly the market was so fixated on OpEx. Like everyone I talked to, hey, we're going to claims, we're going to save some processing money. And I'm like, so you realize that what they pay out on their income statement for claims isn't what it costs to run the claims department at that insurance carrier. Let's just start there, Denise. Even in P&C, your TAM is probably like what they actually pay out in cash to their thing called policyholders, which, let's be real, Denise, the majority of that is consumed by repair costs and replacement costs. It's going to labor and material. For all the P&C people, don't do that. Secondly, on the life and health and annuity side, okay, we have a very different economic focus. So this is your point about mortality and morbidity. And for those people who are life and annuity and health people, you can check out. For those people who aren't, like, let's get your pens out. For insurtechs that are trying to approach that market, please pay attention. OpEx is a rounding error in my balance sheet and my P&L. And I promise you that my people are important. People draw about 80% of my operating costs. But in the grand scheme of my balance sheet, it's a rounding error. Okay, it's important, but it's not driving. What drives my economics and my capital is this thing called mortality and morbidity assumption. Why? Because it drives my loss reserves. I cannot not reserve properly, and that affects my capital efficiency, and that affects real economics. And Denise, I don't know how much of your listeners are US based, so depending on what actuarial modeling they're following versus our international colleagues, which would be following things like market consistent embedded value and IFRS 17 versus the LDTI models in the US. But the point is all these models, regardless of which jurisdiction you're based in, need a thing called a mortality, which is your assumption of death, and morbidity, which is your assumption of disablement or, one of those things.
Injury of some type.
Injury, disablement, anything like that. Okay. Those things are dependent on how well do you know your customer base, the evolving mortality, their health, their wellness, their habits, all those things. So a common example, I'm just going to make this real for people, Denise. In my portfolio at a reinsurer, which is consistent with all the big, like the top 10. So I won't give away anything confidential. I've looked at all their numbers and I used to compare all their numbers. If you can move your assumptions, like an actuarial, business owner does many, many, many assumptions, is if you can move one assumption in one of those categories by 1%, Denise, 1%, that's worth $1 billion potentially to your economics. Okay, so Denise, if you're approaching me, I am always thinking mortality and morbidity. That always drives then my decisioning on something like OpEx. Again, I always say, who makes it into the boardroom? You go into the boardroom and you talk about mortality and morbidity, and you're talking in the framework of 500 million to multi-billion dollar decisions. And you're trying to solve that problem for capital efficiency. So Denise, I think that's one thing that people have to realize when we're looking at creating products, we're creating product market fit, we're always then assigning a mortality and morbidity assumption, when we're doing pricing and when we're doing this other thing in the back end called valuation. We have to connect those things. What we are predominantly looking for, which are things that make us call it strategically modern forward, are solving the consumer needs, wants, and demands, and also basically playing arbitrage on our balance sheet against our competitors. I'm looking for assumptions that my competitors don't.
Exactly. And I think that, that whole concept about the morbidity, mortality, how do you kind of manage that really flows into this concept that's having a growing area of focus, and that's wellness and engagement. On the L&H side, and that it really is around a customer engagement, but it's so much more than that. And it really also requires you to have some data to be able to really kind of engage the customer, but also to assess that customer. So talk a little bit about that.
Okay, well, I'll start by showing my Oura Ring and my Apple Watch. No. So I've got it all. I mean, Denise, I've got the Lumen, the Oura Ring, Apple Watch. I started with the Fitbit. I think I did. I did one of the other ones too, and I felt like Wonder Woman because I had too many bracelets on. But no, let's step it back. Like, interestingly, and this may be a little bit for those who don't know, the tables that we use are very at least 50 to 100-year-old statistical reflective mortality and morbidity studies that look back over time at underwriting and guidelines and all sorts of things. I'm sure everyone on the show would recognize. You've probably been asked at one point, if you've ever applied for insurance, do you smoke? Yes or no? There's a smoker table, there's a non-smoker table, and I won't bore anybody with all that. But what happened, at least, well, this has always happened, but I would say it's accelerated exponentially in the last 10 years, Denise. And I was part of the team working on something called fluidless underwriting. So how do we do underwriting without drawing blood and doing samples? We've been looking for what are indicators that we can obtain so this is the static part of underwriting, as at the point in risk acceptance, Denise. Okay. And to our point earlier, once you do that, and especially in a world where you're trying to ask fewer and fewer and fewer questions, but do it faster and faster and faster, and not intimidate people and not make it laborious. Okay, once you accept that risk, it's on your books and records for a long time. Remember the average I used earlier, 33. The reality is, you and I don't know when you qualified first for your life insurance, Denise, but I'll tell you, I bought my first policy when I was 21. So that being said, I've changed. Well, guess what? I've changed since I was 21. I actually probably ate a lot more poorly when I was 21, but my habits have changed. And so we would call that more dynamic wellness. So to your point, wellness. There are so many ways to get at wellness. And I would have to tell you, Denise, I think our industry did a really poor job of this when we first went at it. So there was I call it like the yo-yo. There's wellness data. Let's give everybody a free whatever and get some data. And I used to laugh because I sat behind all the data. I'm like, Bella, a pile of data. And everyone's like, what are we going to do with this data over here? I literally, Denise, right? So I think and a lot of the engagement models, I'll go ahead and amplify that too. How many apps can you put on one phone that you have to engage with? And Denise, I've been very critical on stage with some of these people and their apps. So I don't mind saying it. It's like, hey, I've got enough going on in my own life. You think I want 5, 20, 30 different insurance apps? Come on, people. So there's still the age of I'll call it the super app. But anyway, okay, so the good news is the quantum leap. So I'm going to get to the quantum leap. We've gotten really sophisticated. We've gotten really wise. We've found a way, as have all the apps. They've all interoperable with consolidation health apps and things like that. What we can do with that. So let's say we've got to make it easy on the customer. not necessarily make them be going into our portal all the time, right? Even though we want that engagement, there's a new way to engage, right? And then we have to draw, the engagement isn't what we're after. We're after how do we draw behavior? Some people might say gamification. I'm a little bit more beyond that. Like, it's got to be really intentional to me. And what am I trying to achieve? And I'll give you a good example, Denise. Noom is a really good example of this. They use psychology embedded in their app for fitness, health, and weight loss. And I just saw the other day that 6 health insurers are activating Noom under their health insurance plan, which I thought was really interesting in the engagement model. Yeah. So I think the overall point here is, how do we get that data to a level that helps us with these mortality, morbidity assumptions? Because life, health, and annuity carriers cannot be surprised in what's in our books, right? Like, that's the other thing, Denise. It is what it is, but we can't be surprised when we're setting reserves. And then the second thing about that is we can do behavioral incentives, and we can also start changing participation in what we're writing real time, so that the risk that we're bringing on can start to counterbalance some of that negative risk. And Denise, you and I saw this when everyone started selling their long-term care block back in the 2000s. Anyway, back to you. I think that's a fascinating way to think about it.
Yeah, I do too. So when we kind of think about all of this kind of pulling together, what do you think are the foundational technologies that are most important for the insurers to focus in on? And where does insurtech kind of fit into this from that perspective? Lisa, if you could kind of summarize, if you had to set some priorities for the next year or two, what would you have them focus in on?
So first of all, Denise, there is not, in my opinion, a master Lego kit where you can go to the store and say, I'm going to build or improve or run a life, annuity, and health company, and this is my Lego kit, and I'm going to put it all together. So step in. So you've got to be, on the carrier side, you've got to be very stealth about what's the Lego kit's unique is not the Legos. It's the little piece that only comes in that Lego kit that makes the Legos perform at a level they otherwise didn't perform. So you've got to identify those, and you got to know what I call them, the plumbing or the Lego parts, right? So first of all, to the carriers, please don't just take everything as that, because you're going to be left with a bunch of Legos that's at best stacked. So you got to be a little stealth. Secondly, Denise, the things that you have to have, right? You have to have an engine and a policy admin that can handle life, annuity, and health. Do not think that you can just spin that up by some, engineering firm or what. Like, that is not a joke. That's like a no joke moment. I'm just saying, like, right? Like, when I get in my car, I expect it will drive. That has to not be underestimated. Then, Denise, to me, it is, and this is where I think of the Lego example. I'm going to take that and I'm going to make it the 3-in-1 kits. There's a suite of things that I think you have to be forward thinking. And if I'm an insurtech, you need to partner with and bundle around those things and not verticalize. And I know your ARR and your VC investors and everyone's telling you, oh, just build a stack. It'll, Field of Dreams, they'll come. Do not build a stack unless you really, really, really know like what you're doing, like, right, Denise? So I think that my advice for insurtechs is understand the ecosystem, understand your lane in that ecosystem, and master your lane. And if you will, your fit, meaning like, Denise, if you're building, you're like, I have to have this piece of the puzzle when I'm building. You have to be known for that piece of the puzzle. That is relatively not easy to put together, Denise, because I think for life, annuity, and health, we're a little quieter than the P&C brethren. Yeah. So I'd say put that together. My maybe last call to action here is, if I'm putting this together, I'm not putting it together in an operational data store in a data warehouse of old. I'm thinking new data techniques. I'm thinking customer in the center, Denise. And so I'm probably me, Lisa, if somebody hired me, I'm probably taking all this and I'm saying, okay, how do I do this on emerging data practices and data techniques? I mean, Denise, you and I are laughing about this, right? Like, I was doing mesh before Gartner had a word for it, but I'm bundling all that on top. But if you think about life, annuity, and health, we are the biggest big data in insurance. And I think sometimes we do a really good job, but we're going to throw some data analytics out there, but we don't do necessarily the great job of thinking through how are we going to solve this data paradigm in a different way. So those would be my big 3, Denise. I don't know what you would have to add to that.
I would say that you're spot on, but underneath it, from a technical architecture standpoint, you better be looking at native cloud. You better be looking at API on native. You better be looking at, because for that to all fit together and to seamlessly work together, you're going to have a different technical architecture on top of it.
Okay. Yes. Thank you. I literally stopped doing business with people who weren't cloud native 8 years ago. If you were not API enabled, I would not talk to you. I'm working what's beyond API. So I've actually gone and I'm now starting to talk to my partners about, okay, cool, checkbox. You don't get to talk to me unless you're API enabled. I'm now like, how would you handle things when we don't need API? So I'm kind of like one step beyond, but I'm glad you called that out. So right, microservices, cloud,
access to any of that operational data from any of those systems, and not just whatever the vendor decided you can have access to. No, you want everything.
That's correct. I don't do gated or locked data. I also don't redundantly put my data in vendors' platforms. So like I talk to a lot of vendors and it's like, hey, in order to use XYZ BPMS tool, or in order to use this, or in order to use that, we're going to redundantly copy your data onto our data store to process. I'm like, no. So yeah, you're right, Denise. If we got into the architecture of all this, I will say be wary, because almost all these vendors have over verticalized. So they want your data and they don't want to give it back. Those aren't terms that I condone or support, Denise. I agree with you on that.
Yeah. You know, you and I have talked about, both of us have been in the industry for quite a long period of time, but we don't look at that all, Lisa. We don't act it at all. One of the things is that I think this is one of the most exciting times of our industry. The opportunity and the possibilities are really endless. So talk to me about, what do you see as those opportunities, and what's exciting you as you're kind of looking forward and you're working with some of your customers?
Totally, Denise. Okay, so let's kind of connect back with what we said, like we were behind. The opportunity is we were behind and we have no choice but to thrust forward. You know, and I will mention Gen AI. I mean, in the sense of, I think LLMs are amazing for life, annuity, and health providers, and I can't amplify that enough. But the fact that we didn't lock ourselves into these architectures that our P&C colleagues have been working on means we can leap forward. So, you know, time to drop the old mainframes and leap forward into a modern tech that's well designed. I also think, Denise, I'm fascinated in the Horizon 2 and Horizon 3 and in the today world of federated learning. How can we leave, like as we go to IoT on wearables, how do we leave that data where it is and not violate privacy and learn from it? Wow. Like those were not opportunities we even had 5 years ago, because the accuracy of federated learning just wasn't there. So federated learning to me is amazing. LLMs in the Gen AI quadrant are amazing. I think also making new products in this consensus led, if you take technology and you think we can take all sorts of inputs for what do people want, and then use AI to kind of wrap that into the regulatory files, procedures, etc. I think also the fact that we didn't really go too heavy into these kind of engagement models that I think are going to be retired or become a thing of the past. Let's really be smart about how we take credit for engagement. And so, Denise, if I put all of that together with the fact that we talked about cloud compute and going to the cloud, but like if we apply that with a federated cost optimization model, now we can do more things in the cloud, but less processing and storage in the cloud even. And so for me, it's like, this is why you and I are beaming, right? Like, let us add it, right? Like, this is like, all the Legos are on the table, all the parts are there. You know how to use them, Denise, and you can form, I would say forming a life, annuity, and health stack right now will be what drives this ultimate launching in society of lifestyle assurance, however we want to call it. And with the generational gap, with the retirement gap, with the largest age wealth transfer, with new people entering into the workforce in these non-static careers, we can credentialize them in a way, I mean, like, to me, that's beyond fulfilling.
And actually, all of that together goes to a fundamental issue. We can close the protection gap, because we still have a huge protection gap out there for people.
This is why, and Denise, we didn't talk about this at the beginning, but my background was in economics, which is why I got into insurance to begin with. I've been after this looming, I call it the Platonic shift. So this protection gap has always been there, but it's been for a traditional non-insured. And we can all say, yes, we still need to attack the traditional non-insured. The platonic shift that I started throwing myself at these projects and the things that you and I like to work on is because what I saw is the traditional uninsured in the future looks a lot like the traditional insured of today. And that becomes really scary, not only for our industry, but for society, Denise, because remember we said we buy most of the investments. We buy a lot of investments. And if we think about what backs wealthy, high-performing nations, it's mostly life annuity and health providers in terms of the bonds, the T-bills, the vanilla investments because of our durations, right? Our portfolios are long duration match. So we do a lot of vanilla / they count on us to be buying those. If we stop having products that people want, that all starts eroding even faster. So Denise, I'm after this platonic shift that complements that because it also helps reach the traditional uninsured as well. So yes, totally to your point.
As always, a fantastic conversation. But what I'd like to do, Lisa, is to end the podcast with the same question I ask everybody. So if you could use one word, I'll even say a phrase, to describe the future of insurance, what would it be and why?
Oh, that's an easy one. Okay, got it. Yay. My one word is dynamic. The future of insurance is dynamic. And the reason why is humans are dynamic, risk is dynamic, our lifestyles, livelihoods, and what we do is organic and dynamic. And I think that it's time that we leverage the technology capabilities that are advancing society to reframe our entire industry from static to dynamic.
I love that. We do that, and there's a lot that can happen, and there's a lot of opportunity out there for companies to really grow and grow really profitably while serving what they need to be serving from a risk standpoint. I know the ultimate, right, Lisa?
I mean, and your balance sheets will be robust, people. What?
You and I could go on for hours, Lisa. I know, but this has been great. And I think the insights into this one segment of the industry that I don't think gets enough focus, which is the L&A&H segment of the industry and the complexities of that industry, but the opportunities. You framed it up so well, Lisa, and thank you so much.
Thank you for having me, Denise. Honored to be with you, as always.
Oh, same here, Lisa. Same here. Look forward to the next conversation.
That's it for this week's episode of Future of Insurance Industry Leaders podcast. Subscribe to our market-leading podcast series available wherever you get your podcast from. Thank you for listening, and be sure to tune in the next time.